So, this is going to be the fifth session, and we're going to be looking at trading management. Okay, with the five, we're going to be looking at trade management, trading plan, and then top-down analysis. How to view the chart from one time frame to another, and how to execute. Okay, this is just like the basic to backtesting. Okay, so after we've done this one, after we've done the six, right, then we're going to add the backtesting session. Okay, and after we've done with all of this, so we'll be looking at trade management, how to manage your trade after you've implemented everything you've learned so far. After you've seen the algo structure, your liquidity type, and all of that. And we've also seen your entry models and your entry confirmations and trade. Okay. After you've seen all this, how do you manage your trade? That's what we'll be looking at today. Okay. Now, hmm, okay. Now, the last time we looked at trading rules, where we talked about all of this. Take the trade with all your confidences and net. Don't over refine the POI down to the seconds. No liquidity, no trade, no IPA, no trade, and always use a stop loss. Okay, we talked about all of this. So now let's begin from risk management. Okay, stop loss and take profit to break even to take partial away. Okay. So we're going to be using examples of previous trade to do that. So let me start load. Okay. You see here? You following, right? Right. Good, good. So first things first, right? After seeing, now I'll be doing okay, don't worry, I'll come back to that. So first things first, we have our demand. Oh, my internet is slow. Okay, we have our demand zone right here. Okay? Then on the 1 minute time frame, we have all of these structure points. We have all of these structure points. Then we have the delivery to take our trade right here. Okay. Then from the bigger time frame perspective, we had we had this from the bigger time frame. Okay, in the sense that this low was our liquidity low right here. This low was our inducement IDM. Okay, now this is our 1 hour time frame structure, external structure, right? Then on the lower time frame now, we are still going to use the lower time frame structure point. Okay, so let's say we take our buy from this refinement right here. We take our buy from this refinement just right here. Okay, so after taking the buy right here, and we've seen the bigger time frame MSU, we've seen the delivery happening on the 1 minute time frame, right? This is the delivery right here, where this is the fake BS, where this is the fake BS, this low is the inducement for the delivery. Then we then spot our rejection candle forming within this. Then we click on the buy right there. We click the buy. Okay. So now after clicking the buy right, after clicking the buy at this point, where should be our stop loss? Okay. Now our stop loss, depending on how large the stop loss is. Okay. Now I'm talking about each side. Okay. For me, I don't go. For me, I used from 1.5 feet, 1.5 feet down to 5 feet. Okay. If need be, I extend this to like 6 feet. So it's advisable not to go below 1.5 feet. Understand? So For this year, after you've taken your trade right here, where should your stop loss be? Your stop loss should always be at the bottom of the rejection candle that's forming. Okay, this is the rejection candle. Let me draw it out so you understand better.
So let's say this right here is our pin bar, our rejection candle that formed, okay? The rejection candle then formed right here, okay? If this rejection candle is happening right here, okay, your entry should be at the close of the candle. Let's say this is a bearish rejection candle. So if entry should be at the close, where should your stop loss be? Stop loss should be below the wick of, okay? If your stop loss is now below the wick of the rejection candle, and you feel that the stop loss is too like tiny and you need to like protect your stop loss, what are you going to do? You can be able to adjust the stop loss below this refined POI right here, okay? So you can be able to like move the stop loss below this, okay? As long as it doesn't exceed your stop loss peep size, you understand? It's always advisable your stop loss should be below the wick. So if your stop loss is here, where should be your overall target? Remember, this high right here becomes the true break of structure, okay? Your target should be this true break of structure. Now, your break even rule. When should you go break even on this trade? Now, you can you can do two things, okay? You can take off your full volume on this leg. So you can probably close off with a 1 to 10 R, or at the moment price gets to this high, you can break even and take your partial and let the rest to run. But it's always advisable to take off all of your trade, all of your volume at the true break of structure high. Now, when do you actually go break even? Remember, this is the higher time frame structure, right? And this is the lower time frame structure, right? Good. So now marking the external structure of the lower time frame, we have this is one structure point. Let me make this clearer. Okay, this is one structure point right here. This is one structure point. This is the second structure point. Okay, that is for the lower time frame. For the lower time frame, the time frame you spotted your delivery, the time frame you took your entry. Okay, so we have this first external structure high, the second external structure high of the lower time frame, right? So the moment price takes this second level right here, you can go break even on your trade. Okay, then you can then move your stop loss down to entry. Okay, so stop loss will now be right here. You understand this?
Yes.
Right. So basically, if price takes two structure points from the lower time frame, and it's only advisable not to use the 1 minute time frame for your break even, okay, unless the 1 minute is not choppy. If the 1 minute is not consolidating in a particular place, okay, you can use the 1 minute. But if it is choppy, then you go to the 5 minute time frame to mark out the second structure point. Okay, so after the break of two structure points, you can go break even on the buy. Now, that is how to break even. Okay, we're going to look at charts for example. Now, there are also conditions where even if price comes all the way to this high, you are not allowed to go break even. In the sense that if price takes out these two structure points, then does this, then comes back down, and then goes back up this way. So you see, price is showing us another reason for it to come lower. Now, price is all about reading the story, okay? So if price does something like this, okay, now what we'll be seeing, we'll be seeing we'll be seeing this low as liquidity, okay? So price can easily come down to this point, look for something to mitigate around here. So price can easily come to this point, mitigate this POI, and then goes back up. So if you've gone break even on this buy right here, price will just come back, take you out break even, and then go all the way to take your take profit without you being in the trade. You understand? So we need to see reason for us to like go break even. And if there's a clear reason that price wants to do, like price wants to like come down to mitigate probably imbalance, mitigate the EPA, okay, price can just come back and do this. So sometimes if you see such reasons, okay, probably from all what we've done so far, if you see such reason for you not to go break even early, that is what you do. So ideally, you break even after price takes out two levels of external structure on the lower time frame. Do you understand? Or on the time frame of your entry. Do you get that? Yeah, if this happens, right? If something like this happens, okay, if something like happens, price can actually come down to mitigate something. Probably you can just take out this low and then goes back up, okay? Or you can come lower just to mitigate a POI right here. So probably when you see something like this, let's say you were not on the chart, you were not on the chart, and then this was your structure high that is supposed to go break even. Then you see price do something like this, okay? So now you then look at what has happened here, okay? What can price do? Price can actually come down, take the inducement, and go back up. Or price can come down here to mitigate the EPA and then go back up. Or price can actually come back down to mitigate a POI right here. So it's actually safer to wait for price to take the inducement and then break this high right here. Then you can go break even on the trade and you can also like take your profit off the trade. Okay, good. Do you understand now? Okay, good. So if you see something like this, right, probably if the second high has not been taken, right? If the second high has not been taken and price does something like this, price does okay, price does something like this. So we know price can easily come back down to take out that inducement low before going back up. You understand? Now, for we're going to look at chart, don't worry. Now for the take partial, right? For the take partial rule, okay? You like I said, right? At this high, at the true break of structure high of the time frame you spotted the MSU, you can take your partial of the trade. If the time frame is not a very high time frame, if it is a 5 minute inducement, a 15 minute inducement, okay, you can take partial on this high and then let the rest to run. Probably you can be having a target on a much higher time frame. But now taking partial, right? Taking partial, it's advisable to use. Let's say if you are targeting a 10 hour daily, right? A 10 hour trade. Let's say for this trade right here, this is my TP. This is my take profit, right? This is my take profit for this trade right here. Okay. Now where I want to take partial, I will partial when price gets to my 1 to 5 or 1 to 6 hour. So when price gets to 1 to 6 hour, I'll take like 70% or 80% of the trade. Then I let the rest to run to take profit. Like, do you get that?
Yes.
So if you want to follow structure points to take partial, it is actually a bit messy, okay, if you want to follow structure point. The only valid structure point you want to follow, probably price is creating all of these. Then you could just use all of these highs as a take partial level, or you could use the true break of structure high. But for it to be more precise, right, let's say I have 6 hour at this high right here, and I have a high that is at this point. So I can just say, okay, at this high, I will take off I'll take off like 50% volume of my trade. So you should like stick to something like this. Use your risk to reward and take your partial. That's advisable. So if your full target is at 10 hour, when price get to 60% of your target, that's when price does 6 hour. Okay, you can take out profit from that trade and let the rest to run. Okay. Now let's look at previous trades and see how we could have gone break even, how we could have moved our stop loss to break even, how we could have taken partial and all of that. So let's see. Okay, let's start from here. Let's start from here. Okay. Now for this sale right here, I don't want to like go on the higher time frame um like show you the full analysis unless when we get to top down analysis, which we'll be doing today. So let's say this is the 5 minute time frame right here, okay? And then we had this price mitigated the POY, came back down, give us an issue. Let's go to the 3 minutes. Okay, good. So now this is the 3 minutes time frame, right? This is the 10-minute time frame. Now, on seeing this 3 minute time frame, marking out external structure point, we had all of these as structure point, all of these, all of these, all of these, right? Price created this inducement, we got in our trade right here, okay? So after taking this sell right here, right? Remember, this is our candle closure, the rejection candle. Take our entry here, stop loss above the candle, okay? Now, if you feel that your stop loss is not protected, there's no harm in taking your stop loss above the POI you used to sell from. So this was the POI initially right here. This was the POI right here. So you see, you can actually move your stop loss just above the POI, and that is fine. Okay. You could also move your stop loss above this one. That is still fine. You understand? Now, that is for the stop loss, right? When do we go break even on this trade? Now, using the structure point, right? So let's say our overall target for this sell right here would be the higher time frame through break of structure was supposed to be this one. But let's use a much cleaner scenario so we understand better. So let's say this right here is our target for the sell, okay? It's our full target. We want to take off our profit at 13R, okay? At 13R. So now let's see all of these loads. Now, depending if you want to like go break even, take partial and take profit, right? The market needs to tell you a story in order for you to know what to do. Now, me seeing all of this low right here as liquidity, I'm seeing all of these lows as liquidity, right? I would not take partial, even if my partial rule, your rules can be like it can be adjusted, okay? So if Okay. So if your 7R, this is 13R, right? So let's say at 7R, I want to take partial. So let's say 7R should be at this loop right here. Okay. Let me use the horizontal line to mark it out. Oh, this mouse is not good. Okay. So let's say 7R is at this low right here. Okay, this is 9. So let's use 8R. Okay, cool. So 8R is at this high, after this logo. Now, if I'm at the market and I see all of these lows right here as liquidity, if I'm seeing all of these lows as liquidity, right? I want to see price take out this last low before I then take profits or do whatever, because price can actually take out this liquidity, take out all of this trendline liquidity, and then reverses to the upside. Okay, so I want to see price take this out. Now, for breaking even, right, that after taking this trade right here, two levels of external structure, we had one level, okay, then this is the ideal second level of structure. But because I'm seeing all of the liquidity, right, I want to see price take out all of them. So after price takes out these two levels of liquidity right here, take out the two levels of structure, I will then move my stop loss into profit right here. So even if price comes up and take it out, I know I am not in losses. Okay. So now, me going break even on this trade. Okay. Now, see what I was talking about, right? See what price did. Price created this low, this low, fake POS, and then give us this inducement, okay? So there's actually reason for price to go higher to mitigate either this completely or mitigate this one right here. So me seeing this, I might hesitate on the break even, right? I might hesitate on the break even. Okay. So what I'll be doing now, let's play it and see what price actually did. So I've gone break even on this trade. At this low right here, this one, I want to take partial, and at this low, I want to take out full volume. Okay. So let's see what price did. Mhm. So you see, price actually came back to mitigate this one right here. This one right here. Price mitigated this one, and then we are still waiting to see if price will mitigate this one. So probably if I did not go break even on this one early, and I'm seeing all of this, I will not go break even on the price comes back to mitigate this one before dropping. So let's see what price actually did. Okay. Okay, let's see. Good. Now, at this point, look now. Remember, I said price needs to tell us a story, right? So this low right here is the true break of structure of this minor MSU. Okay, this is a double inducement right here. This is the first inducement, double inducement. Okay. Now, see, price took out this POI right here, and then price failed to come back to mitigate this. So now, at this point, this is the true break of structure of this ILQ happening right here. So me seeing price come to this true break of structure, right? Even if price want to come higher, price will just come back to mitigate this MSU POI before going down. So it's actually advisable you can then go break even on this trade right here. So I can go break even, and then I'm waiting for my partial level and take profit level. So let's play and see what price is going to do. At this point right here, bro, I have taken 70 or 80% volume of the trade, and I'm letting the rest to run to come hit my take profit. If it doesn't come back to take profits, fine, I've already taken profit of the trade. So now price took out the liquidity low, right? Price can actually go higher and take out all of these, or price can keep on dropping. So let's keep on playing and see what price did. Mhm. I know seeing all of this move, right? Your psychology is going to be tested after seeing all of this drop, and you see price reversing, almost coming to your entry, right? Your psychology is going to be tested. You might close off all of the trade at this point and say, now price might actually come out and take you out break even. Okay. So we seeing this POI right here as an MSU POI, price can actually come back, mitigate this before going down further, or it can come back to mitigate this initial POI right there. So let's see what price actually did. Okay, price mitigated the MSU POI. Let's see if he mitigated the other POI. Good. There was mitigation right here. So you see something about price, right? Price actually came back. Price gave us enough reason that it's going to come back to mitigate this. Now on the higher time frame, right? This will be one move, this will be one move, this will be another move, right? Fake BOS, inducement, then mitigation. That's exactly what price did. So, but still, our stop loss was still protected. Okay, stop loss was still here. Price hasn't gotten to the stop loss right here. If you are the type that moves stop loss into profit, like you trail your stop loss. Let's say as price create a new structure, you trail stop loss, price create a new structure, trail stop loss. That is very bad because with our way of trading, okay, with our way of trading, we trade the algo and want to see highs and low get manipulated. So you trading your stop loss here are going to get out of the trade early because price can just take you out and then continue dropping. So now let's see if there's another reason how to manage this other sale right here that happened. Okay, good. So now on this sale, right, this is a 3 minute time frame. We had our entry right here, right? So taking our entry right here based on external structure points, okay? Based on external structure points, right? Marking an external structure point. This is one. This is the second external structure point right here. And let's say we are targeting this low, right? Remember, this our first trade is still running. Let's say this our first trade is still running, right? And then for the second trade, our target is this low right here. Okay. And this is like a 15 hour, right? So at 9 hour, okay. At 9 hour, I would want to take out partial. Okay, I want to take out like 70, 80% of the trade. So let's say this is 9 hour right here. This is 9 hour right here. Okay. Good. So having 9 hour right here, I want to take profit here. I want to go break even at this low. Now, your partial, right? You should align the structure. So let's say this is my 9 hour. I want to go break even here. As you can see, it's aligned with this low right here. So I'll just say at this low right here, partial. I'll partial 70% and let the rest to run. Okay. So now let's see what price actually did. Let's wait for price to come to our break even level. Okay. Because sometimes, right, you might see this move right here. You can just go break even on time and price will just I'm coming. Out of can you give me a minute? Sorry, I'll be back soon. Okay, I'm coming. Sounds small. Two, come down. Yo, bro. Sorry about that. I'm so sorry, bro. Yo, are you there?
Yes.
Sorry about that, man. Somebody was knocking at my door, so I had to go check. All right. So, seeing this trade getting activated, right? Price can easily come back if you are the type that like go break even on time, right? Now, you can actually go break even early if you are counter trading, okay? If you are counter trading, you can actually go break even on time, okay, to prevent story that touches, okay? So now, if you go break even early on, this price can just come back up, take you out, and then drops. So now let's wait for our break even rule before we can go break even on this trade. So let's see what price is going to do. Let's keep watching. So you see what price did here? Like that. Okay. So see what price did here? Price created this, right? This low got taken by this one. So this was a fake POS, then this was an inducement. So price had reason to come higher, okay, before going back down. So let's see what price later did. Good. So you see, if you like you've gone break even on this trade will just take you out and then drop. Let's see, where are we going to go break even? Let's keep watching. Okay, all this was New York close. Let's see. Okay, Asian session, Asian. Good. So we'll be looking at this low to see where we're going to go break even. All of this is during Asian where we had consolidation and all of that. Good. Oh, I went too fast. Ouch, ouch, I went too fast. Sorry about that. Good. So at this point, when price came to our level of breaking even, right? There we can then go break even on this trade, probably move your SL right here. Okay. Now, where are we looking at next? We are looking at 9R to take out 80% of our trade. Let's see. Let's see. Good. At this point, price can easily take out this liquidity right here and then goes back up. So let's see what price did. At this point, I've taken out 80% of my trade, right? Then I'll let the remaining run to take profit, okay? So now we've seen this, we've taken profit of this trade, and then we want to let the rest run to profit. Now you can actually take multiple partial, okay? You can take multiple partial depending on how fast the move is. So I've taken one partial here, 70%, and we see price coming lower. I can probably just take profit if I feel like, okay, and then I'll let the rest run. So we want to see the trade hits, take profit, okay? Now this first trade is still running. We've taken profit of this. We've taken profit of this. We're waiting for them to hit take profit, okay? Then let's see if this third trade good. Good. So now you see, price did not take us out. We are still in this trade, okay? Because price gave us multiple reasons for it to come higher. I think Globetrotter actually marked out this POI. He marked out this POI because price actually reacted from this POI right here. Price reacted from this POI before dropping. So this was enough reason for price to come higher and then drop. So taking this third trade right here, okay, taking this third trade right here, where was our structure point? Our structure point, right, was the first structure point right here. Then we had the second external structure point. Okay, now let's see where would be our target for these cells, right? For this cell, let's say this right here is our target for this third cell, or we could still maintain this one right here. But if we're maintaining this one right here, and then the target is 8R, right? We want to take our full volume at 8R, right? So if price gets to 5R, I'll go break even and let the rest to run. Or I can easily just let price come to hit my take profit full volume before I close, okay? But it's actually good to take profit of the trade, to take partial So at this low, I'll go break even and let the rest to run. Yeah. So let's see what we're going to do. So at this point right here, so at this low right here, you can go break even. And looking at this whole move right here, let's say this was our target. I would just like take out like 95% and let the rest to come, let the rest run to take profit. Because this right here, so this right here is like 7.3 hour. Okay, so this is actually a good, yeah. So this is actually a good um area to take out partial or take out full volume of your trade. So let's say this is our target right here. These are target right here, and I have gone break even right here. Okay, so where should be our area for partial? We can use this target for the previous two cells to take 70 or 80% partial and let the rest run. Because from this low right here, this level right here, should this whole trade like 12 hour, okay? So this could be like 8 hour or 7 hour. So let's see what price actually does. Ooh, that was fast. That was fast. That was fast. I was not expecting that move. So yeah. So at this low right here, you could actually take partial, or if you set your take profit right, price can just come down and hit your take profit without you even knowing. So you see, we had one winner with partial 70% partial here, 70% partial here, and both of them still came to hit take profit. Same thing with this one. We went break even at this low, and price just came to hit take profit without us taking partial. So, like, so far, like, are you getting the point?
Yes.
Right? Do you have any question, any observation, or whatsoever? All right, cool. So let's see. Let's see. Good. So if I was hedging, why is this moving so fast? Good. If I was hedging, right, I know price is bearish, right? And I want to take this buy from this whole POI right here. If I want to take this buy from this whole POI right here, and I take my trade from this candle closure and stop loss below this week right here. Okay. Now, because I know this trade is against the overall trend, it's against the order flow. What I'm going to do, from if this high gets taken out, I'm going to go break even because that's just one level of structure right here. This was internal structure. Everything here, this was internal right here. So this was just one level of external structure. It was the second level. So if price takes out this high, I'll just go break even and let the rest run, okay? Or if I see how far the move is, I might just go break even because it is a counter trade. So let's see what price did. Good. At this point, I'll go break even on this buy, right? I normally move stop loss to break even aggressively when I'm trading against the trend. That's when I want to hedge. That's when you see me go break even very early. Okay, so I'll go break even on this trade right here. And normally I go break even like just a peep. Or what did I do? Just a peep above the entry price or a peep below the entry price. That is exactly what I do. Where is it? Okay, where is it? Good. So what happened here? What happened here? Break even right here. Price went all the way up. Took me out break even before going higher. So you see, maybe probably from here, you would have taken profit, you are taking partial. If your target was probably this high, but since you know you are trading against the trend, right? You could probably set your target at this high. This was 6R. Then when price gets to 4R right here or 5R, you can partial out 70 or 80% and let the rest run to take profit. Do you get that?
Yes.
Okay. Let's look at other scenario before we proceed, okay? Let's look at other scenarios. Let's look at this day. Let's understand what price did this day. Let's see. Let's use the 1 minute time frame this time around. Okay. Good. So for this day, right? For this day, this buy ended up as a loss. This was against my trade. Good. Now, good. For this second buy, right, I was not following my rule. Okay. Because right here, same scenario that happened the other day. We had this liquidity build up right here. All of these trend lines, their liquidity, right? So let's say from this high at this high right here, you can go break even or you can partial. So I'm talking about this second buy right here. So me taking my trade from this buy right here, where would be our two structure point that price we're going to take out before we go break even. Okay. Now from this one right here, we had first level of structure, second level of structure. Okay, so price was supposed to take out this high right here before I go break even on this buy. But because I thought I was trading against the trend, okay, I went break even too early. Good. So now see what price did right here. See what price did. Price went up, down, went up. So equated this liquidity right here. This was SLQ. So this was enough reason for me to say, okay, price was actually going higher. Price was going to come down to take out this low before going higher. But then I was aggressive. I went break even too early without seeing what price was saying. Don't know if you get it. Without seeing what price was saying, and price actually did exactly what it was supposed to do, take out the liquidity before going higher. So at this point right here, I was supposed to go break even on this trade. That when price comes to this high, I was thought to take partial, okay? But then you need to have, for partial, you need to have your targets fixed, okay? So let's say if this high was our target, if this high, what am I doing? Ouch. Okay, so if this high right here was our target, right? For this buy, if this high was our target, and I went break even after here. This is this is 6R, okay? So at exactly 4R, I'm supposed to take out partial, take out 70 or 80%. So 4R will be around here. So if you take partial of this, you know you've already locked profit. If price fails to hit your take profits and then comes back down to it to break even, you've already secured profit from this partial right here. So that's one advantage of taking partial, okay? So you see the mistake I made right here, which we're supposed to learn from. Then let's see for this other cell right here. Now, for this cell right here, at this point, I knew price was actually going higher. So for this cell right here, what price did? Oh, I did not keep all of the markup, but then okay, let's see. So for this cell right here, the target was this one because I was looking to buy from here. So if the target of this cell was this one right here, okay, where are you going to break even? You are supposed to break even one level, two level. Okay, sometimes at that point where you are breaking even, you can also take partial. So for this one right here, probably this was like 6R or whatever, and this was 4R or 5R. Okay, so you see, if your rule, right, if your break-even rule, your partial rule, and your TP rule are very close, just like this one now, your break-even rule was your break-even point was here, and your target was here. You can just let the trade run to hit your trade, okay? Or you can just use the internal structure point to break even and whatsoever. Do you understand that?
Yes.
Okay. Now, for this buy from this PUI right here, okay, when the buy was happening, right? our structure points where you could go break even, we had one level, two level right here. Okay, so this was second level of structure. At this point, you can go break even. Or when you see this happen, right? This fake POS inducement, then the only POS price was supposed to mitigate was this one. So you could wait to see price, mitigate this, take out this high, then you can go break even. So now for your targets and take partial, right? You can go back on higher time frame. So let's say this high was a higher time frame target for the buy. This high was a higher time frame target for the buy, right? Now, we're going to look how many R is that buy. This is like 9R, okay? This is like 9R. So at 7R, which was supposed to be here, at 7R, right, take out 80% of the trade and set your TP here, okay? So you let price run to see what price is going to do. Because price, if you are the type that don't take partial, that don't take profit from your trade, price can just take price can just go higher, almost hits your take profit, and then goes back down to take you out. That is very bad. It's a very bad thing to leave money on the table. Okay, it's advisable to take profit. You can set your own take profit rule, take your partial rule, and whatsoever. But this is a very good partial rule. Okay, so at this point right here, you can go partial and let your remaining trade hit your target. Okay, so now the percentage of your partial depend on how you want to do it. You can just partial out 50%, you can partial 60% and whatsoever. But the least you can partial is 50%. So 50% and above, okay? Then let's see for this other cell, this group. So for this cell, let's say this was our full target and this was 14R. So at 11R, which was supposed to be here, I was supposed to take out 80%. I was supposed to take out 80% when price gets to this low, right? So after taking our trade right here, the external structure point, we had one, and then we had two, but these are too close. So let's mark out this one. So we had one, and at this low, we want to see price take it out before we go break even. So when price took out this low, right, we go break even, and at this low, we want to partial, and our full take profit would be at this low. So far, is it making sense? Do you understand what I'm saying?
Yes.
Very good. So you need to like align what the market is saying. Okay, you need to align what the market is saying in confluence with your risk management. Okay, know what the market is doing before you're going to like take partial, break even, or whatsoever. So let's look at what we have next. Okay, what we should be looking at now. The next thing we'll be looking at is the news trading. Now, for news trading, right, it's not advisable to trade news movement because news could be double-edged in the sense that this is where price is, news can come back down, go up, and does this. So if at that news hour you want to sell, right, price can just give us a loud buy and blow up your account because news during news move, right, price used to jump your stop loss. So let's say these are entry, these are stop loss, and news wants to happen, right? If that news want to happen at this minute, price can do this, right? And then your broker is going to close your trade at this point. So this was the initial stop loss, and then this is where your broker is going to close you out. So you see, if you're risking 1%, this should be like 6%, right? Your broker is going to close you out at minus 6%. This is one mistake that prop firm traders use that makes them blow account. I have blown an account due to this, okay, due to news. I traded a minute to news, placed my stop loss, and thought all was well. So this was entry, this was stop loss. And what price did? Price just went down the spike, and then this was where my stop loss got activated, and then I lost my account. So that's why it's actually advisable not to trade during news if you're trading the prop firm. Okay, for the news that happened today, I'm trying to see. For news move, right? I think I have mentioned this time without number that at that minute of the news release, price gives us a spike, gives us a spike. Then the actual move happens immediately after the news, right? Price can give us that spike, consolidate, gives us reason to take our buy to go take out that high, that PUI created due to the news, just like what happened today. Okay, We've done news trading before, but it wasn't detailed. Just like what happened right here. This was the 3:45 p.m. news my time. Okay. So I got in this trade like 5 minutes to the news, okay, and stop loss was here. What price did? Price just give us the down move, right, to go hit whatever profit it was. And then price created this POI right here. And don't forget, news POIs is often liquidity. Do not trade off news POI, their liquidity. So what price did right here? Price gave us the news move, came back to this point, consolidated, gave us reason to take the buy to go take out this high. So if you are taking a news prior to news, right? Prior to news, just be just have an open mind because price can actually do anything, right? So if that news happened after the news, right, and you are taking the news, that you are taking the trade after the news, okay, just know that that POI created due to news or that high created due to news is liquidity. So you can use that as your break even or your full profit, okay, depending on that move. So this was not a very loud, this was not a high impact. This was like 30 pips movement, okay? So you can use this high to take partial and let the bet run. So you see price actually came back to take out this one. So let's look at how we would have getting involved on this trade if we were trading it. So let's see. Good. So this was the news move, right? This was the news move. And then the spike came down. We are then looking for a reason to take the buy to go take out the high. And remember, you need to know what price is doing, what price is reacting from the past in order for you to take your trade. So let's see what price actually did. If there was delivery or behavior, good price did all of this, all of this. At this point, right? Let's read the candlestick movement. Price came down, up, down to this point, and then up right here. So there was no delivery, no behavior. Okay. So let's see what price is going to do. Okay, good. Price came back to this unmitigated week. I'm sure if we go down on the second time frame, right? I'm going to mark it out for you. So you see the delivery that happened on the second time frame. This was it. We had this push up, we had this push up, right? Price came back down to this low, came back high, and then came back to mitigate this week. So at this point, this was fake BOS, this was delivery on the smaller time frame. So this was what price did. And when price came here, created this rejection candle, we can buy from the closure, or if you are setting limits, you can buy from here and stop loss below this week right here. So we don't move stop loss, okay, on the price take out this here we're supposed to like take partial from because we know this high is the liquidity high. So let's see what price is going to do. You see all of this move, all of this move, all of this move. If we would have gotten involved in this trade due to what's it called? Due to the rejection candle, right? We would have taken our trade this way, buy here and stop loss below this week, right? Stop loss below this week, which we would have getting stopped out before price going our way. So it's always advisable to let your stop loss breathe. Give your stop loss room to breathe, okay? Or your stop loss always protected. So from this buy right here, price took out this high. Where is it? Price took out this high. Okay, good. At this point, you can go break even. And let's say our target for the buy, right? Our target for the buy, yeah, our target for the buy was this high because this week right here was liquidity. What am I doing? This week right here was liquidity, right? So our target for the buy be this one right here. So this was 8R. So at 5R, I'm supposed to take partial. So let's say 5R was here. So at this high, I have gone break even. So I've gone break even here. And at this point, I'm going to take out 80% of my trade and I'll let the rest run to take out my take profit. So you see, it's a win-win. I've locked profit and price hit my take profit. Let's see if price came to this take profit. So trade was a win-win. Do you understand that?
Yes.
All right, good. So for every news move, right? For every news move, price gives us another move, the real move that happens after the news. Okay, and it's going to give us reasons for us to take that trade. Good. So let's look at what we have next. Good. Now the trading plan. Now for the trading plan, right? This is my trading plan, right? This is going to serve as a guide for you to create your trading plan. And how do you create a trading plan? After you must have done series of back testing, series of forward testing. Okay, when you've tested out your strategy, right? When you've tested out your strategy, that's when you can create your trading plan. Now, I'm just going to like list out this trading plan, and then I'm going to send you a screenshot of it so you'll be able to use it to create yours. Okay. Now, the first one, check the higher time frame, 4 hours and 1 hour for next liquidity level. And liquidity level could be ILQ, SLQ, TLQ, previous daily high, low, session high, and low, and all of that, right? So when you check them on the higher time frame, mark them. And when you mark them, you want to see price, take them out before going the opposite way, right? Good. So after checking that, you check now, after checking the 4 hour time frame for liquidity level, right? Let's say this right here is our next liquidity level, okay? We've marked this to want to see price before we buy. Now we cannot be waiting for price to come all the way here on the 4 hour time frame because price can do all of this before coming to take it out. So while waiting for price to take out this thing, on the lower time frame, you can still get your lower time frame MSU to sell to come to that liquidity level before you buy. So we're selling here and buying here. Okay. So the next plan, right? The next thing on the plan, check 15 minutes and 5 minutes for next draw on liquidity. So now this 4 hours time frame on the lower time frame, right? Like 15 minutes or 5 minutes, we could be seeing this structure point, external structure right here, external structure. Then we have this inducement. If this are next drawn liquidity on the 15-minute time frame, this is where we could be selling from to target this higher time frame inducement before we look for buy to this high. Do you understand this?
Yes.
Okay. Now, for the next one, after 1 hour liquidity grab, switch to 5 minutes and wait for confirmation. This is very important because from the higher time frame, if you see the liquidity grab on the higher time frame, so let's say liquidity, this is 1 hour time frame, and price grabs liquidity right here. Okay, so after price grabs liquidity right here, okay, you cannot just switch directly to your 1 minute time frame to start looking for entry. You are supposed to go lower, go on lower time frame to see what price is doing. Okay, so after price take the 1 minute liquidity, go to the next lower time frame, 15 minutes, and see what price is doing. Go to 5 minute time frame and see what price is doing. If nothing is happening on this time frame, you then go lower. So wait for your confirmation, as easy as that. What we have next is what we've talked about yesterday on the last trade. No inducement, no trade, no inefficiency, no trade. There always has to be inducement. Even just like how we did the entry models, right? Whereby for behavior, we want to see fake BS, we want to see inducement before we take our buy. For the delivery, we want to see fake BS before taking our buy. So there always needs to be inducement before taking a trade. If you are taking a trade this way, like this, right? High and low, I want to buy sell from here. Okay, probably on a much lower time frame, price must have created this on the lower time frame, which makes this our inducement. Okay, so just put that in mind. No inducement, no trade, no inefficiency, no trade. Now, this rule right here, no 5 minute MSU or EPA, no trade. Now, the 5 minute time frame and the 15-minute time frame are very powerful time frame. You could be trading just these two time frame and you will actually be doing well as a trader. Okay, on the 5 minute, on the 15-minute time frame, you can just be waiting for 5 minute MSU. You buy 5 minute MSU, you sell, and all of that, right? So you could be doing that. So if you're actually trading just 5 minutes or 15 minutes, just wait for 5 minute MSU or EPA no trade. Now, for the EPA aspect, right? If I'm trading EPA based on 1 minute time frame, I remember I took a sell, was it yesterday? Not yesterday. I think last week, right? Where I traded off 1 minute time frame EPA and price took me out, right? I failed to follow this rule right here. This was 1 minute time frame. Sorry, let me draw it out a little bit clearer. let's say this was 1 minute EPA. I took this sell right here and price came down, took me out. Meanwhile, on the 5-minute time frame, the 5-minute EPA, the 5-minute EPA was here. So I was supposed to wait for the 5-minute EPA before I take my trade and not the 1-minute time frame. Do you understand that? Because just like I said, the 5-minute time frame is a very powerful time frame. Now, 1-minute MSU will be considered after 5 minutes or 15 minutes EPA or MSU. I remember when we were talking about entry types, we were talking about the entry models, the 1-minute MSU, right? Now, just remember I said the 1-minute MSU can be used as a continuation trade, right? So on this 5-minute and 15-minute time frame are medium time frame. They're like the mid time frame, right? They're in between the lower and the higher time frame. So you can trade off the 1-minute MSU after seeing the 5M or 15-minute MSU. Let me explain that with the chart. 5-minute MSU. The next lower time frame, the next time frame closer to the 5-minute time frame is the 1 minute on MT4. On TradingView is the 3-minute time frame. So after 5-minute liquidity gap or 5-minute EPA, you can switch to your 1-minute time frame and look for your trade to buy. Same thing for the 15-minute. Just like I said, from 1 hour MSU, you cannot just switch to 1 minute and take your trade. You need to start going lower. 15 minutes, 5 minutes, and all of that. So if no liquidity grab, trade only mitigation of MSU POI. We've explained this a lot of time. MSU POI, MSU POI, inducement, fake BOS, true BOS. Okay. Now, if no liquidity grab, this is MSU POI right here. Okay. So if price does this, this is liquidity grab before MSU POI. We can take this out. But this rule on the plan states that if there is no liquidity grab, you can only trade mitigation of MSU POI this way. You can trade this before dropping. This is very clear. Now, what we will be looking at next, rejection candles can be traded after inducement or EPA on 15 minutes or 5 minutes. Same thing we have after inducement got taken out on 5-minute time frame. When you go down on a 1-minute time frame, you can spot the rejection candle. You can take your sell right here and stop loss above this high. Do you get this point? Yes, we can trade that one. Yes.
Okay.
Okay. Now, when you have too many structure points on the 1-minute time frame, switch to the next higher time frame. Now, 1-minute time frame can be confusing as hell, okay? So on 1-minute time frame, you can have a lot of structure points. Let's say you can have a lot of structure points right here on the 1-minute time frame. So you don't know which one price is going to liquidate. Price can take out this one and go higher, can take out this and go higher, can take out this and go higher, right? Price can do all of this. So if it is confusing, switch to a much higher time frame, 5 minutes, or you go to the 3 minute to look at what price is doing. Now, on the 3-minute time frame, price can be doing this, this, and this. So you will know you'll be looking at this low to get taken out to avoid all of this stop loss on the 1-minute time frame. So if the 1 minute is not clear, switch to the next higher time frame to take your trade. Now, Use 1 minute for your entries, price delivery, price behavior, plus candlestick information. Now, since you have not started trading and for backtesting, right? You can be using 5 minutes for entry. You can be using 1 minute for entry. As time goes by, you're going to stick to the 1 minute because we are going to understand how the 1 minute works and all of that. Now, consider 5 minute rejection candle. I 5 minute rejection candle, right? You can trade off 5 minute rejection candle if the stop loss sizes are not large, okay? So for 5 minute rejection candle, it shows a great sign of rejection. So that means if you're going on 1 minute time frame, you're going to see multiple rejection. And for 5 minute rejection candles, right? This is the week, right? Price can start going higher and then comes back down to mitigate that week before going higher. So on 5 minute time frame, you can consider the rejection candle to trade. Sometimes I don't go to 1 minute. I just use 5 minute time frame and trade off the rejection candle. You understand?
Yes.
So the next one, know the algo cycle you are in. So for the algo pattern, right? When we have this is the break of structure. This is a liquidity. This is a break of structure, a normal break of structure, this is liquidity. When price does this again, this is a break of structure, this is a liquidity. So where are you right now in the market? We are just ranging. Want to see price take out any of them. So if price does this, if price then comes down to take out this two, we say we are at the inducement level, right? We are at the inducement part of the algo cycle. So if we then take our trade, price comes to this high, we are at the true break of structure high, which means the algo cycle has been completed. Just know where you are. If you are at this level right here, what you should be expecting, you should be expecting a move to the true break of structure. You should be expecting a move to the true break of structure, okay? Because you know you'll be looking for entries right here. If you are at this true break of structure high, we say the algo cycle is complete. And what you should be expecting, you should be expecting a mitigation of the MSCPI before going higher. So you know what to do at this point. You can start taking profits off your buys. You understand? So that's an importance, right? So you need to know where you are in the algo cycle. The next important rule, know the order flow and flow with it. Know the order flow and flow with it, okay? If you are in a bearish market and you want to ping pong, you want to hedge, it is totally fine to ping pong, okay? But then just like I said, if you want to ping pong for the buys, you can break even aggressively because price will be going lower, okay? Now, for today, I sent a markup for the 4 hours inducement I was watching, okay? And for the 4 hours inducement, I want price to come take out this will be the true break of structure of that sell. So throughout today, I was not interested in any of the buys. Probably have taken this one right here. But because I know the order flow, right? I know the order flow of the market and I want to flow with it. I did not look for any buy because I know buys we're not going to like hold for long. So I just kept on taking sales. I took about like 5 to 6 sales a day without taking any single buy for the day. So know the order flow and flow with it, okay? If you want to trade against order flow, set your take profit, follow your risk management rule, take off your trade and all of that, break even on time and all of that, okay? Now, the last one we have is do not over leverage, do not stack, okay? Do not risk and all of that. And of course, leverage, do not trade without stop loss. Now, for this, right, starting position is not advisable. Re-entries, right, are different from stacking. Okay, let's say for this trade, I'm risking 0.5% on every of my trade. This was 0.5, this was 0.5, this was 0.5. And you see, all of these are entries and not stacking. Stacking is when, for this particular sell, as I'm seeing the trade right here, I'm going to enter like 4 positions. So you see, I'm over leveraging for just one trade, I'm risking like 2% instead of the usual 0.5%. Okay. So let's say I enter like multi-position, 5 positions here, and all of them hit stop loss. That over leveraging, and I am risking way more than I should have risked on that trade. So it's advisable Do not over leverage. Do not stack. Do not trade without stop loss. Just wait for price to provide re-entries and then you take them. I hope you know the implication of trading without stop loss. Let's say I want to buy from here. I want to buy from this zone right here. Right? See, I bought from here without stop loss. You see how price went all the way down. If you are handling a very small account and you want to like you are risking 1% of that account, you might lose your account due to all of this down. Okay, so advisable, do not trade without using a stop loss. Do you understand everything here? So,
Yes.
so I'll send it to you now, and what you're going to do, right? Probably after your whole study and all of that, you are going to come up with yours trading plan that suits your own trading style. Okay. We not start position. Okay. So let me save this and send to you. Good. So now, what we'll be looking at now is the top-down analysis. Okay, how you should view the market. Remember, this is not the backtesting session. This is just the top-down analysis. How you should analyze your chart when you come to the market, right? When you are starting trading for the day, what you should do, what you should look at, and all of that. So let's see. Capture. So what we are having now, you can actually start your analysis from a much higher time frame, like say daily time frame. You can start from the weekly. Okay, that if you plan on swinging your trade for long, you want to hold your trade for a long period of time. Okay, so let's see. So now this is the 4 hours time frame. Basically, I start from the 4 hours time frame. I see what price is doing. Now, from the 4 hours time frame, what are we seeing? We're starting analysis from here. We're starting from here. Um, from here, okay, to see what price is doing. Now, what price is doing from the 4 hour time frame? We had all of these structure points. This high, we had this low, right? We had this high, we had this low. So at this point, this was normal break of structure, right? This high was normal liquidity. We want to see price take out the liquidity, right? So this becomes our inducement high. This becomes our what's it called? This becomes our fake viewers. So I think to make this better, I should just I should just use the replay to make this better. Okay. So when price came all the way to take out this inducement high, where should we be looking at to trade from to go target the true break of structure, which is supposed to be at this low right here? Now, I'll be looking at this first POI. This from the 4 hours, right? So I'll mark this up as our unmitigated week on 4 hours time frame. I'm going to mark this whole range right here, this whole supply range as my POI. So I have 2 points of interest. Now, after seeing this on the 4 hour time frame, I move to the next lower time frame, which is the 1 hour time frame. So on the 1 hour time frame, I can then say, okay, I have refinements on the 1 hour time frame, right? We are watching the 4 hours IOP play out. So this is what we have. We then have this refinement, this POI on the 1 hour time frame right here. So I'll be watching this. Now price is inside our 4 hours POI, right? Let's go to the 15 minute. And as you're doing all of this, right, like try to all of your trading rules. On 15-minute time frame, what is happening? Price is still within our POI, right? 5-minute time frame, will there be a confirmation to take our trade? Nothing yet. Then I go to the 1-minute time frame. On 1-minute time frame, I'm seeing a rejection candle. Now, this rejection candle, I'm going to then go back in time and see if price is reacting from something, probably an extreme POI, an extreme refined POI on the 1 minute time frame. So let's see. Looking at this right here, our last POI on the 1 minute time frame that left imbalance was all of this one right here. So I will see price reacting from this 1 minute extreme POI. Okay. So then with the way I trade, I will take this sell right here. Okay. I'm going to take this sell because this is a rejection candle. So at the candle closure, I'm going to take this trade. Okay. So this was the candle closure. Then I'm going to take my trade right here. Although this is like 6.3 pips. So definitely I would have, from my trade you've seen, I would have taken the trade from somewhere here. But let's keep it this way. Okay, so we'll be looking at this to target the true break of structure. It's like 14R, okay? It's like 14R, and our partial level is somewhere here, or let's say here. Good. This is like here, let's say 8R or 7R. And for break even, right here, maybe I'll put break even. So now, me taking this trade, I'll also still look at the chart if I'm going to see any of my entry models, okay? Let's see what price is going to do. If it's going to provide any of our entry models, good. Right here, you see now from this point right here, these are liquidity high, right? I am not going to break even here because price can actually go higher to mitigate any of these weeks before dropping. Let's see what price is going to do. Price did not price fail to take it out. At this point right here, I might have gone break even on the trade. So I'm waiting to take partial here before I take profit. So I've gone break even. I've gone risk free on the trade. At this point, bro, at this point, I've taken 80% of my trade off. 80% of my profit I've taken, and I want price to come to this target right here. This is what we have. I've secured profit for this trade. And now what price is going to do? The price actually came back to take out this low. So you could use this low as a take profit low. Let's see what price is going to do. It's taking profit off. Let's see. Price failed to take out this true break of structure. Yeah. Price failed to take it out. And let's see what price is going to do. The price actually went higher to take us out of this trade. So we've gone break even, and we've also secured profit from this trade right here. Meanwhile, we still have our POI. We had this POI to watch. We also have this POI to watch. Let's see what price is going to do. Let me switch to a higher time frame so for faster replay. Let's see what price is going to do. Let's play this. All these are during Asian, okay? These are during Asian, where price just keep on consolidating. We have the next day, this is the new day, okay? Now we've gotten taken out break even. So this was where we could have gotten break even. So this was the break even, right? Then let's see what price is going to do. That's what we're going to do. Now we are looking at these two POIs for price to come mitigate, okay? Why is it not playing? Okay. Let's see if we get mitigation of our POIs, okay? Okay, nothing's happening. Nothing's happening. Let's go to 15 minutes to see what price is doing. Now, we would have gotten involved in this trade, but price did not mitigate our week, or did it? Yeah, price mitigated. So we would have gotten involved in this trade, but since we missed it, we missed it. Now let's wait for a reaction. Remember, the full target is this right here, true break of structure. Okay, so now price came into the 1 minute refined POI. I then go to the 5 minute time frame to see what price is doing. Now from the 5 minute time frame, was there any reason that will make me take a trade on the 5 minute time frame? Nothing. So I switch to 1 minute time frame and see what price is doing. On the 1 minute time frame right here, I'm seeing sign of behavior, but then price already mitigated the POI. So from this rejection candle right here, I might be taking this sell, but then I might be taking this sell, but we missed this sell, so let's not take that sell, okay? So let's play and see if there's a reason for price to come higher to give us entry for the sale. Good. So you see, no reason, no delivery for this sell, no behavior. Price took us out. When price took us out right here, switch to the higher time frame and see if price is still within your liquidity level. Now, at this point, right, a double inducement getting played out. This was the first inducement. This becomes the double inducement and price inside our POI. This is for the sell scenario. Now, looking at the buy scenario, is there any liquidity that price is going to take? This is external structure, external, external, external. So we want to see price come to take this low. So this right here becomes fake BOS. This becomes inducement. So I want to see price come take out this inducement high before going back up. But then looking at this, looking at the order flow, right? Looking at the order flow, right? We see price has been bearish on the 4-hour time frame. So this is more, this has high probability for price to come take out the two break of structure before moving. So then let's see what price is going to do. We move to 15. We look for entry reason. We look for entry reason. How we're going to take this trade. So on the 5-minute time frame, this was our POI right here. This one, come, let me see if it's this POI right here. Okay, at this point, price mitigated this POI right here. Now, when price comes into a high time frame POI, you can then look back into that POI and look for refinement. Okay, look for refinement. What price is going to do? So we are going to see this week as our last unmitigated week right here. Okay, then you can mark the whole after that one, right? Then you can mark the whole candle, the last buy to sell candle as a POI. So right there, we have 2 points of interest to look for sell from. We have this one that got mitigated, and then this refined POI right here. So now let's switch to the 1-minute time frame to see what price is going to do. On the 1-minute time frame, price already mitigated this one right here. So on the 1-minute time frame, we have 1 minute MSU. On the 1 minute, the 1-minute MSU was this. These are structure point, inducement, mitigation of the unmitigated week. So taking this trade right here, there was no candlestick confirmation. You could use limits. Now let's see if we take this trade from here. Let's see our stop loss value. Now, your stop loss can be protected by this PY. If you are fine with 6 pips stop loss, you can take this trade. If you are fine with 6 pips stop loss, you can take this trade. Or taking this one right here, this is like 1.4 pips. But then, let's just see what's happening. Let's say we take this sell right here for 6 pips stop loss, and we are still waiting for price to mitigate this. So let's see what price is going to do. My internet. Sorry, bro, my internet is messed up. Give me a minute. Yeah. Are you here? Can you hear me?
Yes.
Okay. Sorry, I'm having issues with my internet. Let's see. Okay, but so let's say we are in this cell right here, and I'm still looking for possible sell because I'm looking at this as the fake BOS, the inducement for the behavior. I want to see mitigation of this and then sell. So for this trade, I'm going to like set my limit right here, stop loss above this 3 pips stop loss, and then let's see what price is going to do. So I have one trade running and a limit set. So let's see what price is going to do. Price did not come to take that. So for this trade, right? Good. So for this trade, we've gotten into this trade at this point right here. Okay. So if you go break even early, you see price will just take care of break even and then falls. Now our level of break even might be this one right here. Okay, break even. Then our target. Let's look at our target. Let's see where would be our target. Our target is the true break of structure. right here from the higher time frame. So this is like 120R. So for 20R, right, we want to partial right here. So you see, if your risk to reward ratio is very large, just like this one, like 20R, right, you can be flexible. You can be flexible and use all of these lows, all of these previous low as your partial low. So for this kind of trade, I can partial like 3 times, 4 times. I can take partial here, take partial here, take partial here before dropping. So let's see what price is going to do. So let's see. We've not gone break even on this sell, right? We want to go break even from this low right here. So let's see. At this point, I've gone break even on this first sell. So this sell, delete my order. So I've gone break even right here, and I want to take partial from that sell at this right here. So I've gone break even, and then let's see what price is going to do. Now, when we start the actual back testing, right? The back testing section, we're going to look at how to take re-entries, okay? How to take re-entries because there's a very clean re-entry on this one. So after we've gone break even, this was the 1 minute MSU. Say POS, inducement, mitigation of the unmitigated week, railway track candle confirmation, your sell, your stop loss above this high, and continuation trade. Do you understand that? Do you know how this? Do you understand this, right?
Yes.
Okay. So now I'm looking for where to take partial. Okay. So now me seeing this move, this has not gotten to this 20R take profit, right? So at this point, it's like 8 hours. This has not gotten to like 50% of the move. So I'm going to keep waiting to see if price comes to my first take partial level, which is this one right here. And right here, I will do 80%. This is Asia. The next day, I'll go 80% partial. Let me see much higher time frame for faster movement. So let's see. Price is all of this range, all of this range, all of this. At this point, the price are still not yet taken. So at this point, I am going partial, okay? So from our trade management, take partial and the break even and all of that. You see how we went break even at this point, and then we took partial right here. So you could then use this next level, this next structure point as your second partial level. Use this next structure point, this next liquidity level as your partial level. With this one right here being your final take profit. Okay, so let's just play it and see how price went. Okay, let's see back and watch. If price it was break even or actually goes to the true break of structure from the higher time frame. At this point, I might have closed like everything and I might close everything and let 0.01 lot size to run or 0.1 lot size to run. So at this point right here, we're going to have the TPOS. Exactly what we have right here. Okay. So now look at how from the higher time frame, this was the inducement, double inducement. This was double inducement. This was double inducement right here. So you see how we traded off this POI, no entry reason for this POI. Now remember, I said I would have taken a sell right here. Let me go back to it. I remember, was it this one? Yeah, I remember I said I would have taken a sell from here. So this would actually ended up as a loss. This would have ended up as a loss, 1L. So looking at how price actually behaved, okay? In all of our POIs, we had reasons to take our trade. And our overall target was the true break of structure. And price also gave us reasons, gave us multiple structure points to go break even and to take partial on everything. So, yep, that is just it. This is just like a minor backtest section, but not the actual one. Okay. So far, do you understand everything we did today? Starting from the, where is it called? Starting from the risk management, all of the rules, the fundamental, the trading plan, and then the top-down analysis. Do you understand everything so far?
Yes. Yes.
Yeah. All right. So, yeah. So what we're going to be doing, right? What we're going to be doing, our next session would be on Sunday. Our next session will be on Sunday. The session will not be a long session, more like a 20-minute or 30 minutes. It can even be before that Sunday. Okay? I'll just communicate to you when you're free. So we're going to do it. So psychology, we're going to talk about this. If we've had experience on live account and funnel account before, we're going to talk about this. And then we're going to hold an extra session for back testing. Yep. So do you have any question you're supposed to ask? Because this is like the end of the fifth session, okay? You understand everything so far? So what you're saying is like, how do we know if trend wants to change, right?
Yes.
Oh, fuck. Can you do that again? My internet, I'm having issues with my internet.
Okay.
So you're basically saying, yeah, you're saying, how do we know if the trend wants to change, right?
Yes.
Now, if the trend wants to change, it all comes down to algo too. If the trend wants to change, let's say we're having this order flow, it's giving us liquidity, liquidity, liquidity. If trend wants to change, remember, if the market wants to move in a direction, it's going to keep creating liquidity level. It's going to be building up liquidity for future transaction. So trend is going to change this way. So let me go back a little bit. Now, if you have the normal change of character, right? The normal change of character, we have something like this, change of character, something like this, right? For change of character to happen, right, we want to see liquidity everywhere. So if you see something like this and price start coming up, know that this right here will be a change of character as long as there's liquidity before that PY. If we have this happening, this low get taken out and price start coming this way without any liquidity around here. That's not a change of character. Price is going to take out this high and continue to move. But if it has liquidity, just like the transactional liquidity could, so for change of character, TLQ be your friend. TLQ is basically for change of character. Okay. And again, this answers the question, right? And again, if price wants to like reverse, if price wants to change, okay, price is going to keep building liquidity. Price is going to keep building liquidity for future transactions. So for this one right here, for this thing, okay, now we are going to be anticipating a buy soon. Okay, we're going to be anticipating a buy soon because see what price is doing. Price is protecting all of these highs, while taking the lows. Remember, I used to say this a lot. Price transfer the money from the buy to the low. So if price keep on doing this low is not safe. Price is protecting all of the highs. Now price is coming for the low. And when price comes for this low, take this low. What we want to see, all of these heights as liquidity, price is going to take them out. So this is a sign of a change of trend, a change of character. Okay, I normally say this a lot of time. Does that answer your question? Now, if you want to know how to trade something like that, right? Let's say we're having a continuation, I want to trade something like this. That is where you have to see the normal MSU on the 1 minute. That is still a continuation trade. Let's say you take a buy right here for the counter trend, right? And then price is going higher, right? If you want to take a trade somewhere here, right? Still look out for the 1 minute MSU or the 5 minute MSU, right? If you just look at MSU in that direction, you are going to like know how to trade it. But since we will be doing the backtesting session, we're going to cover everything. You understand?
Okay.
Yeah, don't worry, we'll cover everything, okay? So for now, just keep doing markup every day. After every day markup and like mark out every POI and how you could have taken the trade and all of that. Do you understand?
Yes.
Okay. So that brings us to the end of the fifth session. For the sixth session, right? The next session, let me see. Today is Tuesday. So let's see on Sunday is too far. On Friday. On Friday, we'll do the last session, okay? The sixth session, sorry. So on Friday is my meeting schedule. Um, so on Friday, same time, right? Same time,
Yes.
Friday. So this is what we're doing there. All right. Everything's good, right?
Yes.
All right. All right. Take care of yourself, bro. You have a great day, okay?
Okay.
All right. Bye.